The broad markets like the S&P are kicking off 2026 with some interesting geopolitical events around them, like Maduro's exit from Venezuela. So let's take a look at the E-mini S&P 500 futures as well as the Nasdaq and the Dow to see what is happening as the market digests that news and as we get underway with our first full week of trading in the new year. Now, I last did a report on the E-mini S&P for a video format on December 23rd before the holidays, and I was talking about a forecast pulling markets up and to the right. Now, overall, that has unfolded. There were pauses along the way. So there was a recovery higher, paused on December 26th, the day after Christmas, that one single Friday of trading. Then during the holidays week, there was a pullback, but another doji that captured the end of the downward correction. Then we had the market action that we are seeing now post the Maduro event. Now, what I want to talk about here is a forecast I had laid out versus a new forecast in place. So when you use my forecasting methods, which I teach in my loss forecasting trading system, I talk about how they're great for a guiding light for where a market may head, but I also teach you how to adapt if the forecast doesn't play out. Now, the forecast was for the ES to reach 7176.5 by January 8th. That still technically could happen. It's not out of the realm of possibility tomorrow. However, to me, it seems unlikely because what happened is these cycles that were forecasted to create that projection have been truncated, have been squished down a little. The market consolidated more than expected, okay? So now I'm going to remove those lines. Again, they're not wrong. I just don't want to be the focus. And now my updated forecast is for futures to trade up to 7089.25 by Friday, January 9th. So still uptrend, still up and to the right. Now, from there, let's take a look at what we need to pay attention to in case futures don't trade higher, right? Prepare for the alternate scenario. So right now, if we trade below the January 2nd low, so I'll draw a pink support line there, I would be concerned about the longevity of the current upside we're seeing, and I would be more on the lookout for a return back to the November 21st range. All right, now we'll do the same thing looking at the Nasdaq and then the Dow. The forecast there was for shares to trade up to about 26,800 by January 5th. Clearly, it did not happen. So we can remove this and we can regroup and see what's ahead. So this is the updated forecast, okay? 26,312 by January 12th. No guarantees. These are guidelines, but they're really helpful because it's kind of like a magnet pulling in the price action, right? So that way you have perspective. Remember, you have support and resistance to deal with along the way. And currently, as long as we stay above this low from January 2nd, similar to the ES, same idea, I expect further upside. Otherwise, a return to the December 17th range. Now looking at the YM futures, the forecast that I gave before Christmas is still intact. And I've been commenting about how the Dow has been stronger than the Nasdaq or S&P, so this tracks, right? So that forecast is still sitting there, 51,271 by January 9th. Do I personally think that will be hit? No. Do I personally think we may continue higher towards that level by that date? Yes. I just don't know if the speed and angle of this move will actually unfold. Either way, the support to keep an eye on is the January 2nd low to keep the bull trend intact. So this is just an initial look at what is going on with the broad market futures as we kick off the new year, and I return to looking at the markets in depth with you in these daily videos. So if you got any insights, useful analysis tips, reminders about your technical applications, go ahead and hit that like button, and I'll see you in the next video.